Good afternoon. Welcome to Options Tender. It is FOMC day, Thursday, November 7th, 2024. We should see some volatility today. Again, I know I've mentioned it over and over for you who have been on this channel. Been looking for a top. We've had some good pullbacks, but a top is near. And I assure you that, and I'm going to give you that the indication here. I'm going to try to show you why I'm looking at it like that. You don't have to follow my trades necessarily. You guys all get my trade alerts, and just know with my trading style, I hedge. I'm a swing trader, and I hedge my trades going into big events like the election, for example. I had somebody blame me in the comments for their losses on that pop overnight, and it's just a shame because I mentioned it in the video the night before about my hedges to the upside. I said my biggest one was Tesla, and that worked out fantastic. So I won't harp on that. I just want to make sure everybody trades safely. That's all. I'm trying to give indications that we're getting a reversal imminently, and I'll show you why. So we're doing this intraday at about noon Eastern Standard Time. If you're interested in getting these videos intraday, please consider becoming a YouTube supporter for 99 cents. And also have it available for individual analysis. We already went through a video with all the big tech stocks on the weekly time frame. So for the individual analysis YouTube members. Okay. All right. So let's jump into it here. We have SPY. On the monthly time frame, we're going to go down to the 65 all the way through, and then we'll go around the horn with individual stocks. Okay, so we have the monthly time frame peak here, 2021, and we're forming a top here. I thought that this candle, we had a reversal red candle here, would be the top. That isn't the case, but I do want to assure you, even though we're in a bullish stance, there's nothing bearish about this. The indicators are telling us otherwise. So we have a Class B peak here. That's a divergence in itself. And then we have a 3-peak negative divergence in the RSI. On the slow stoke, we don't have a sell signal yet, but we do have a negative divergence forming on this brand new high that we got here. Okay, so that's super important. I want to just make sure that, although I've been off of my timing for some of these individual trades, that's why I swing out three months or so on a lot of my trades. And so anyway, let's go down to the weekly. And I want to educate as I do this. So if this is, if this takes too long, please feel free to put the speed on 1.25 or 1.5 so you can get this information a lot faster. And I watch multiple videos a day, so I like to get them done faster and just get the information that I need. So you have the top trend line here from a potential channel. We're at that point right now. Can price go a little bit higher? Sure. So we're pushing out the 8 EMA. Momentum still the upside. It had this huge catalyst. I thought that we might test this area down low. Didn't quite get there, but that's okay. We were at the 50 moving average on the daily time frame. So no big deal. We had the warning signal there. Anyway, so again, nothing bearish about this except the fact that we're at resistance with negative divergence. Negative divergence, 3-peak there, negative even on this last move here. You got negative divergence so we're getting an early sell signal on the slow stoke. This will play out, and it will probably play out swiftly. So if you are bullish, just be careful. Okay, so on this one real quick, here was our last target here at the 162% retracement. Where do I get that? I get that from the previous correction, okay? We had our 127, which was our first target, first primary target, and then the second and last would be the 162. Now, what's happening on a fractal term is that there's other retracements that happen, right? So when we go to the lower time frames, we'll show that there was unfinished business with this retracement. It was a deep retracement, and so we had to go tag those retracements from that correction too. So let's go ahead and do that. We don't have any time relationships on the weekly time frame at this point, so nothing to cover there. Then a daily time frame, again, we have all of these lines up here where we're getting the confluence. There's zones, so we're above most of those. And on the weekly or on the daily time frame, I just made sure that I made my my wedge top here, because we were forming a wedge here after we broke down from that major wedge, back tested. We just formed another wedge to go higher, and we're at that peak right now. So we still could overthrow that at that point, and we'll see what happens. But if we get this reversal here soon, and I'll show you, we're looking for at least at the latest on Turnaround Tuesday next week, we should quickly come, first of all, to test the bottom of this wedge. But you break the bottom of this wedge, and we'll be looking for this wedge bottom here. So we'll have a couple spots for sell signals if we break down from those points. And I suspect, because we don't have a initial wave one, I put this arrow here so we can, this is a zone. This is a good zone for support. Okay, this was already a good zone for support there. We held up in that zone. Also the 50 period moving average on the daily time frames, so simple. And if we get some sort of move, it probably will be pretty swift. And if it's from FOMC, it could be pretty devastating and follow through Monday, for Friday to Monday. So this would be my zone that I think with this uptrend line, I don't think we'd get much of a pause here. We'd have this area from 556 to 565, and I presume it would come down to this trend line and maybe get a wick through there. So anything in between, maybe the 560, and that's where the 100 moving average is. So let's move over to frames here, and this is what I was talking about in the fractal point. So we had this correction here, and now we have our primary retracement, which again, that's where I thought price was going to. This is where I started to get bearish here. Price got above, couldn't hold, and we had that correction. All right, and so with the election, we had this massive move up here. And so what we talked about was getting above the 138.2. It held on to that. And so naturally, these are the minor levels in between. Naturally, it got up to the 592.61. That's the 150 retracement from this correction. And now it's holding above there. So we can only assume at this point from the FOMC, we probably get a pop and drop, or maybe it just continues to grind into the time relationship that I have here, this cluster at 1111. Now, I think that's a very viable situation where that goes into Monday and Tuesday here. But I don't want you to be caught off guard. If today is extremely volatile and we pop up here to the 599, that's a 162% retracement, and it drops all in the same day and gives us a huge, some sort of wick or whatever, reversal signal, then I suspect Friday into Monday should be pretty devastating, and maybe 1111 is a low. So I'm not telling you guys to bank on that situation. I just want you to be aware of the two possible scenarios that I'm looking at here. And it doesn't need to reach this 599. It just seems like that's the likely spot since price is holding over 592.61. After that, I do think the move will be pretty large. And again, I don't know if these levels, this is a major level here at 520. I don't know if they'll reach there. These are just placeholders on direction that I think the market's going. So let's go to 65. In a traditional sense, we have our wedge here. I was trying to see if that would hold on that point, but really our wedge seems to be fit better how I had it yesterday. But either way, let's put it at that peak there. Either way, we're here, had this expanding wedge, broke out from there from the presidential election, and we're rejecting off the top of this wedge at this point. I'm going to take this one out just to clean things up. And what I think could happen is price gets over here. If we have a tiny, this is what I kind of want to focus on, and this goes for today. So if we get some sort of correction here, maybe we close the gap, maybe it's just a small correction going into FOMC or after it, and price decides to go a little bit higher. This all could happen very quickly too with the volatility, and goes a little bit higher here to these targets, and I'll show you why I got these targets, where I got them from, and why. Then what we're going to do is we're going to form a divergence. So you saw on all the time frames we have this negative divergence. Well, after this large move, after this played out, this divergence played out into this correction here, and from the election, the large move to the upside has nothing yet. It is in the oversold territory for the RSI, and you see this MACD. I'll go out a little further. Has exceeded these highs, so that there's no more negative divergence that was that burned through. But now on a micro term, we're looking at this either being oversold, and then we get our reversal, and that could happen at any point. Or now that we have these oversold conditions, we get a slight pullback, and then we finally make a lower high here, maybe here, but most likely on the RSI, a negative divergence in this very micro term, and that would probably give us the signal and the chain reaction from the 65-minute all the way up to the monthly time frame, where that would start creating a chain reaction and getting our reversal there. So I think that's a more likely situation, and if something happens here, a correction, maybe we get a little correction, then we grind into Monday the 11th next week, and that's when we start getting our turnaround Tuesday. But again, all this could happen after the announcement and the Fed starts speaking, Chairman Powell, and maybe we get a spike down and all this happens in 1 hourly candle, then that just as good. So where did we get those price levels up top? This every single time frame matters. So again, we had this time frame where we get the targets, the retracements at the 150, which we held today, gapped above and held today. And now even closer, we had this correction here from the presidential election at the bottom here, a gap above, and now our target right up here in this micro term is the 162, and that's a 597. But by the time we get up to that area here, we're likely to be into this 599 as well anyway. So that's why I made that zone here, and that's where I believe price will reverse. So some will say, you're attracted to the 600, so $1 more above the 162 doesn't change anything. But here's another time cluster that we have. First of all, the 8th. So whatever happens today going into tomorrow, we could have something happen there. But then we have a cluster over into the 13th. So, and that somewhat lines up with that daily 11th into the 13th. So we'll consider that time frame as a zone from Monday to Wednesday where we could get that reversal. Let's go to the Qs. And the Qs, just a massive move here, exceeding the wedge top here, the throw over. And we can do this target together here. It appears that we had a high here, and it looks like an ABC expanded flat. So we can go onto the Elliott wave. In this correction, you could do it from this top here or this top. It's not going to make a huge difference. So you have your regular retracements to 50, 60, 80, and now we've clearly exceeded all those. So now we need to go into our over the 100% retracements and put those in. So you see why we're pausing right here. We're at this 162% retracement from this near-term zone. And so that's why price is pausing. Again, it can get above it slightly and just reverse from there. But that's what we look for in every near-term situation. Okay, we did exceed new highs, and we talked about on the weekly time frames that we had, I think we talked about it yesterday, that we have negative divergence in all those. So nothing more to say about that. As soon as we start getting reversals on the lower time frame, these will start to play out. And so a big thing that we talked about on the members video is that you see that the Qs are making brand new all-time highs, and SMH, the semiconductors, are not. Okay, that's a divergence in itself. I still think this looks like an impulse wave, and we're getting a bear flag. Could this bear flag fill out a little bit more? Yes, we have 260, about 268 or so for this to fill out more. It's possible, but I just want to make you aware that this can be, if we're setting up right now, this also could be a simple wave 1 here, and the wave 2 being a lower high right here. And so that would bring us to an A, expanded flat to a B, and then a 5-wave move up for a C. So this would be an expanded flat for wave 2 off of wave 1, and you continue lower from there. So if we make new highs, that's invalidated, and then we're probably going to go up a little bit higher to tag the top of the bear flag. Let's go to IWM. IWM, we sort of concentrated on that yesterday, and we're at that 887. Not much higher to go before you get to all-time highs. But this is, I have it in the blue, so we'll keep an eye on that. But this is the scenario we're looking at real quickly. On the weekly time frame, this could have a wick below this. So we're still at 887 on higher time frames. I know it looks like on the 65 that we're getting above. If we stay above, we could go to this next level. That's the all-time high at 244 right there. And it still would be valid for a flat pattern. So the B wave can still exceed the former all-time high and be an expanded flat too. So this isn't a super reliable situation, but I think ultimately wherever this ends up reversing from, this is what we're looking at, is a flat pattern, an ABC, whether we exceed the high or not. And lastly, the VIX. Let's go to the daily time frame first. The daily time frame, we're dropping below the 200 moving average and the 15 support here, which it's a zone. We have room left there. We'll have to keep an eye on this as FOMC occurs. Look for reversal potential. Okay, if this thing continues to dip down, then something else is happening. We're getting new all-time highs, and price action continues to melt up further. And I will give you a bullish scenario in just a second here. Now, with the negative 20% that we got yesterday, that gives us a 95% chance that today or tomorrow we will have a down day in the overall market. So that's important for me to show. And now let's go back to SPY, and I just want to give you, if the market melts up and we're wrong about the situation, this here, first of all, it looks like it could be a 5-wave pattern, or it could be, we could have our A here. Let's go to the daily, because I believe I did it already. Okay, so in this last move here, we have a possible scenario where this is a three-wave move into A, B, and a C for our ending diagonal, okay? So that's how I'm counting it. If price wants to just continue higher and just grind this, they call it nesting. This and I call it a 1-2-1-2 setup. So this could be 1-2, 1-2, and price is in a wave 3 and continues to grind up relentlessly, won't stop at this 599, won't stop at 600, and continues to go up, and it should be a pretty massive move. Likely, if we have a scenario, this is with the bulls, I'm not in this camp, but I have to keep an open mind. If you have a 1-2, then your wave 3 should likely get up to about the 640 area. So that should be a one direction move up here to 640 to 643. And after that, you still have wave 4, 5, 4, 5 to go to continue this market structure. Okay, so that's a super bullish scenario. And then if we get a correction, and you're still bullish, then this structure could be a leading diagonal where you have a 1, 2, 3, 4, and wave 5. And then you would likely make it back down to about the 50-60% retracement, and your market continues higher for wave 3 at that point. 4 and another 5 up there. So I'll leave this here for you bulls. But what I think is with the negative divergences in all time frames, that we get a reversal, we're likely to continue lower highs, lower lows. Okay, so that's what I got for you. Hope this helps. Don't forget to like the video, and thanks for all the support. Have a wonderful day. We'll talk to you tomorrow.